What's up, everybody? It's Investors Insight 2.0 here, and today we're diving deep into the world of finance, looking at none other than the Oracle of Omaha himself, Warren Buffett. Now, if you know anything about Buffett, you know he's been a long-time proponent of value investing, sticking with what he knows and holding for the long haul. But recently there have been some interesting moves in Berkshire Hathaway's portfolio. Some might even say bold. We're talking significant investments in tech companies, a sector Buffett has historically been hesitant to touch. So, what's changed? Has the Oracle had a change of heart? Or is there a deeper strategy at play here? We're going to break it all down, analyze these recent investments, and try to understand the method behind the madness. So, buckle up, grab your thinking caps, and let's get right into it. First up, let's talk Apple. Now, this isn't exactly a new investment for Buffett. Berkshire Hathaway has been holding Apple stock for a while now. But what's interesting is the sheer size of the stake. It's massive, making up a significant chunk of Berkshire's portfolio. We're talking billions and billions of dollars poured into the tech giant. Now, you might be thinking, Apple, that's not exactly a risky bet. They're already huge. And you'd be right, but that's kind of the point. Buffett is known for his value investing approach, and Apple, despite its size, still represents value. They've got a rock-solid brand, a loyal customer base, and they're consistently innovating. Plus, with their forays into services and wearables, their revenue streams are becoming increasingly diversified, which is something Buffett loves to see. It's a classic case of a company with a wide moat, something Buffett always looks for. So, while it might not be the sexiest investment, it's a strategic one, and it's clearly paying off for the Oracle. Next up, we're moving from a tech titan to a company that's a little less of a household name, but no less interesting. Snowflake. This is where things start to get really intriguing. Snowflake is a cloud-based data warehousing company, and their platform has been making waves in the tech world. Now, this is where we see a bit of a departure from Buffett's usual playbook. Cloud computing is a rapidly growing sector, but it's also incredibly competitive, with big players like Amazon and Microsoft vying for dominance. So why would Buffett, a man who typically shies away from high-growth, high-risk sectors, decide to invest in a company like Snowflake? Well, it seems the Oracle sees something special in their technology. Snowflake's platform offers a unique approach to data warehousing, and they've been racking up some impressive clients. It's a bet on the future of data, and while it might seem like a gamble, it's a calculated one, and it speaks to Buffett's willingness to adapt his strategy in the face of a changing technological landscape. Now, let's shift gears and head south to Brazil, where Buffett has made a significant investment in StoneCo, a fintech company specializing in payment processing for small and medium-sized businesses. This one might seem a bit out of left field, but it actually aligns with one of Buffett's long-standing investment philosophies: investing in what you understand. While the technology might be new, the underlying business model is not. StoneCo is essentially facilitating commerce, something Buffett knows a thing or two about. They're tapping into a massive and growing market in Brazil where access to traditional financial services is limited. It's a classic case of finding value in an underserved market, and it highlights Buffett's ability to see beyond borders and identify opportunities where others might not. Now, let's talk about a sector that's near and dear to Buffett's heart: energy. But here's the twist. We're not talking about oil and gas, at least not entirely. Buffett has been increasing Berkshire's stake in Suncor Energy, a Canadian company heavily invested in oil sands. Now, this might seem counterintuitive in a world that's increasingly moving towards renewable energy. However, Buffett is a long-term thinker, and he understands that the transition to a clean energy future will take time. In the meantime, there's still a huge demand for oil and gas, and Suncor is well positioned to capitalize on that demand. Plus, Suncor has been making strides in reducing its environmental impact, investing in renewable energy projects and carbon capture technologies. It's a play that balances short-term realities with long-term sustainability, a delicate balance that Buffett seems to have mastered. Finally, let's talk about a sector that's always on investors' minds: healthcare. Buffett has been steadily increasing Berkshire's position in Bristol Myers Squibb, a pharmaceutical giant with a diverse portfolio of drugs. This move is all about stability and dividends. Healthcare is a recession-proof industry. People will always need medicine, and Bristol-Myers Squibb is a leader in the field. They have a strong track record of developing blockbuster drugs, and their dividend payouts are nothing to sneeze at. It's a classic Buffett move, investing in a stable, profitable company that provides a steady stream of income. Now, for a truly unexpected move, let's head east to Japan. Buffett surprised many when Berkshire Hathaway disclosed stakes in 5 major Japanese trading houses: Itochu, Mitsubishi Corp., Mitsui & Company, Sumitomo Corp., and Marubeni. These companies are massive conglomerates with their fingers in a wide range of industries, from energy and resources to food and textiles. So, what's the appeal for Buffett? Well, for one, these companies are undervalued compared to their American counterparts. They also offer diversification, both geographically and across different sectors. Plus, they pay dividends, something Buffett loves. It's a move that highlights Buffett's willingness to look beyond his own backyard for value and his long-term perspective on global economic trends. Now, all these investments are interesting, but there's another aspect of Buffett's recent strategy that's equally noteworthy: share buybacks. Berkshire Hathaway has been buying back its own stock at a record pace, indicating that Buffett believes the company's shares are undervalued. This move is all about returning value to shareholders. By buying back shares, Berkshire is reducing the number of outstanding shares, which increases the value of the remaining shares. It's a classic case of putting your money where your mouth is, and it shows that Buffett is confident in the long-term prospects of his own company. Now, despite all these investments and buybacks, Berkshire Hathaway is still sitting on a mountain of cash. This has led some to question whether Buffett is being too conservative, missing out on potential opportunities. However, Buffett is a firm believer in always having a cash cushion, especially during times of uncertainty. He sees cash as a source of strength, allowing him to make strategic acquisitions or weather economic storms. It's a reminder that sometimes the best investment is patience, waiting for the right opportunity to come along. Now, no discussion about Warren Buffett would be complete without addressing the elephant in the room: succession. At 92 years old, Buffett won't be at the helm of Berkshire Hathaway forever. While he hasn't publicly named his successor, he has hinted at who it might be, and his recent investments could provide some clues. The focus on technology and international markets suggests that Buffett is preparing the company for a future that will be increasingly driven by these factors. It's a reminder that even the Oracle of Omaha is thinking about the long game, ensuring that Berkshire Hathaway continues to thrive for generations to come. So, what can we glean from all these moves? Well, for one, it's clear that Warren Buffett is not afraid to adapt his strategy in response to changing market conditions. While he remains a value investor at heart, he's also willing to embrace new technologies and explore opportunities in different parts of the world. It's a testament to his flexibility and his ability to stay ahead of the curve. Ultimately, Buffett's recent investments are a reminder that even the most successful investors are constantly learning and evolving. They're also a reminder that the principles of sound investing, such as patience, discipline, and a long-term perspective, never go out of style. So there you have it, a deep dive into Warren Buffett's recent investment moves. It's clear that the Oracle of Omaha is still at the top of his game, making strategic bets that are shaping the future of Berkshire Hathaway. Whether it's embracing new technologies, exploring international markets, or simply buying back his own stock, Buffett is constantly looking for ways to create value for his shareholders. It's a masterclass in investing from one of the greatest of all time. Don't forget to hit that like button and subscribe for more insightful analysis of the financial world. Until next time, keep those portfolios diversified and those minds sharp.